Hello everyone, welcome back to Crypto Cash. Thanks again for joining me here. Hope you're having a phenomenal day. Happy Wednesday to you. What a messy market we're in right now. My goodness, Bitcoin ETF, some ridiculous tweets from Gary Gensler. This is just a mess of a show here. So yeah, we're going to talk about Solana, see what's going on. Cool thing is our premium, our plus spot here has basically been scalping Solana pretty good here. We got some nice profits from that guy, XRP and ETH as well. So really, really cool stuff. Happy about that. And of course, we took a nice little 42% in one trading day there, roughly, from our Solana trade I took yesterday after analyzing the charts. So what does that all mean? Well, let's look at the backend data and kind of see what's going on. Also to note, if you are new to the channel, I'm not a financial advisor. I truly hope you can learn something today. Again, cryptocash.tech is a website if you want to consider registering to become a premium member. It's really awesome stuff. Let's go ahead and get this all refreshed here for you. And again, yeah, I get a lot of questions on how to use the signals effectively because I have a different strategy than most. Again, it's more so like a profit securing strategy. So just a quick heads up. Make sure you reference our signals guide, read from top to bottom, read it multiple times. It doesn't make sense at first. It's really straightforward, just kind of letting you know specifically how I structure my trades and how to get the best out of those signals, okay? Just be sure to check that out. Okay, so let's go ahead and jump into the 7 days here this is the last 7 days of liquidation for Solana. So we can kind of see here some really, really messy behavior. Bitcoin, first of all, when Bitcoin ETF was approved for about 2 minutes, the price shot up instantly. It went from like what, 95 to 108 in like 1 minute. Comes up here to wreck all these shorts, and then 1 minute later, Gary Gensler's tweet apparently is fake and false, and it was a hack, and the price comes right back down, and it's been bleeding out ever since, okay? So again, this kind of stuff happens in the market all the time. You get kind of used to it. It's kind of just you almost laugh at it after a while because it's just nonsense. I don't mind these things because we're using low leverage, low position sizing. That's why we took those nice profits from yesterday, right? Again, that was a 5x leverage trade at 45% in one trading day. Granted, that little candle wick helped hit us an extra target, but regardless of that fact, we still would have survived those ebbs and flows because we're not using crazy leverage. Again, you're tired of getting wrecked, I highly recommend you consider checking it out. If not, that's cool too. Just highly recommend also just using low leverage. That's just the way it goes, okay? Better safe than sorry. So $91 is a close approximate for the lower liquidation levels here. So we got 91. Let's go ahead and put that on the charts just to give you perspective right there. And then of course, upper liquidations, I guess you could say 108, 109 is the upper range. So it's quite a ways away, okay? So again, we got a bit of a spread here, so to speak, where liquidation, but you can see there's some extra stuff here that still needs to be swept that hasn't yet. Okay, some more recent stuff we'd see on the smaller 12-hour time frame. We're not going to bother with that. I just want to kind of cut to the chase here. We do have a nice little bull flag pattern here. There's a decent chance that we will continue higher. Had the spot ETF been approved, it probably would have been up here by now. Okay, again, there's no guarantees on that. It may never be approved, who knows? But generally speaking, from a technical standpoint, we're looking pretty solid here with this descending type of trend. Elliott Wave does anticipate on larger timeframes that we have one more leg up as well. So there's a decent chance we're going to see 135 or higher. Okay, and again, this is a previous week close at 135, coincidentally right there at 1.272 fib. So 135 to 137 is the next target if we break our all-time high, the most recent high here for this year. Or last year, depending on how you look at it. You could pretty much say this year, though. All right, so that's kind of where we're at there on the daily. Quickly to note, too, we're still below the 20-day SMA, but we're over the 50. Mostly positive, not phenomenal, but still good. Treading water at 50 on the RSI, also not phenomenal, but still positive, if that makes sense. Stochastic RSI is swinging up, and MACD is losing its momentum. Actually, no, it's gaining momentum, rather. So that's somewhat conflicting, okay? But to me, the more important one is stochastic RSI and the traditional RSI being up over 50 and swinging upwards. We have a much better chance of the price continuing up than down at this point. Now, is it going to just pivot and take off from here? No, unless there's some really good ETF news, which is supposed to come later today. At this point, we're just going to go ahead and chill and relax and not worry too much about it, okay? Again, congrats to our members for those nice profits. I'm confident we're probably going to hit our other targets. If not, again, we took most of our profit out. Stop loss adjusted break even. We're good to go. Again, read the signals guide if you haven't already. That's the strategy. You take profit in your first 2 or 3 targets, and you make sure that you adjust your stop loss higher. Price comes back down to break even. You've already secured a majority of the profits, and you're always profitable. That's the whole point, right? Are you trading to not be profitable, right? It seems pretty straightforward to me. I don't know. Who am I to think? Okay. what we want to look at here on the 4-hour is a few things, because yesterday it was looking like it's going to diverge, which it is right now so far. So we're diverging on the MACD, kind of just letting us know that momentum has shifted from bullish to bearish. And again, you can see that here pretty clear on the charts, right? We got lower lows and lower highs. So generally speaking, while that is spreading out a little bit more, it's still coming down. Okay, there's no other way to look at it. That's why the bull flag pattern exists, because it's a consistent lower high, lower low pattern that bounces off a previous resistance level, which is roughly that 80 to 85 range. So we wicked all the way down to 85. The probability of us coming lower than that is pretty low, but we do again still have this lower liquidity level that needs to be swept. Right? There's different strategies or thought processes here, but generally speaking, everything's pointing down. There would be no reason for Solana just to instantly recover, because Solana is an interesting one. We'll just put it that way. Oftentimes it will recover quicker than you expect it to. So I'm not saying that it can't. Just saying from a technical standpoint on the 4-hour, we're seeing this transition from bullish to bearish, or not even bullish, because we had this little increase, right? A nice little pump, but it was short-lived. Okay, so we're now below 50 on the RSI. Money flow index is coming back down. Stochastic is swinging down, and MACD is officially diverging. So we have some things, some saving graces here. These previous resistance channels, because we were stuck. We were in this power of 3 situation where we had the accumulation, liquidation, and the emergence there, essentially, basically 1, 2, 3. Now that that's all said and done, this previous little channel can still work as a support. So somewhere between 93 and 95 is somewhat of a support channel, but outside of that, there's not a lot of other supports. Minus 80 on the charts, which is the previous high before we broke through on the 15th of December. Okay, so again, just some things you got to think out loud about. The 4-hour time frame is not fantastic. Now, is this big pattern going to break out for sure? Yeah, it seems pretty likely that it will. It's just a matter of time. What would invalidate this is obviously we break down as low as 80. If you break lower than 80, then this bull flag pennant pattern, the bull flag pattern is effectively invalidated. Okay, so for right now, we can presume that will continue that will happen and will likely bounce, but it could literally be between now and 85, which is what we've already seen. We've seen 85. So do we get a double bottom, or do we just continue up from here? We will see here soon what will happen next. Anyways, last but not least, let's go ahead and talk about the Ichimoku cloud and just confirm that we're still below the cloud. We have broken bearish-ish. I like to emphasize the ish there, because lagging span is kind of close to the price action, but simply put, if the price just goes straight sideways, we literally have 24 to 48 hours of continuation to not worry about closing a short if you have one open. Now, as far as the long is considered, do you take a long at this point? Well, that's really up to you. As you can see, the price is kind of dancing around in this previous little channel, so there's a good chance we could become range bound again and continue upwards, or the same thing and continue down. Honestly, it's almost a flip of a coin at this point specifically, because everything we looked at in the macro is mostly bullish. Everything we looked at on the 4-hour, that transitionary time, is mostly bearish. What do we think is going to happen here? Well, whatever happens on the hourly will translate to those other time frames. So for right now, at this point, if we can hold 93 and just get a closure of 93 to 95 today, I think that would be a solid start. That's what I'm going to ultimately be looking for. And as a better case scenario, to be able to break this descending trend line, we need to close either above the cloud or above $100. Again, the $100 has been like that point of contention. And yes, we did close here previously, but we quickly lost that. So that's why we look for a daily candlestick closure, not an hourly candlestick closure, because it's 24-hour confirmation instead of 1 hour. It's 24 times more powerful, right? Math is fun. All right, so generally speaking, that's what I'm looking at here. Okay, $100 plus, that's what I want to see to be able to confirm bullish behavior and to confirm this this trend essentially to the upside. Again, we're in a descending trend. In order to break the descending trend, we need to establish range-bound activity. You could argue that we are range-bound, but we're really not. So until we continue to hold a range and or start to make higher highs and higher lows, we have no leg to stand on for a long position. Okay? And I'm not saying just to short your shirt off because of it. Yes, we're taking profits in our Premium Plus group with a lot of shorts, and those are quick in and outs, by the way. Those are day trades, they're scalps. They're supposed to be, hour or two, maybe 3 or 4 hours. If you're holding longer than that, it's okay. You just got to adjust your stop loss as you move into profit. But again, day trading is much different than swing trading. If you're swing trading this bad boy, you want to wait for confirmation. Really what we're looking for. All right, folks, I hope that made sense. I described that correctly. Thanks again so much for watching. Make sure you check this out too. Of course, Bitunix, phenomenal exchange, no KYC, no VPN. They have a trading competition that's going to be eligible or available rather on the 15th. You have to use my link to register, and then you just click this link here to join after you've registered, and you'll essentially be eligible for that in the future. It's a really, really good option. It shouldn't incentivize you to trade more. It should just incentivize you to, have fun with trading. That's the whole concept, I guess, is to have fun, because making money can be fun, right? So again, just be careful, cautious, and obviously try not to overtrade. Today's just kind of a garbage market day, so no other way around it. You're probably just better off staying on the sidelines. Okay. All right, folks. Thanks again for watching. We'll see you in the next one. Take good care of yourself.